Welcome now, Stock Trades. In this video, we're going to go ahead and talk about a stock that not a lot of folks are actually paying attention to. Okay, we've covered this stock a couple months ago. In fact, in our Al Stock Alerts and Mastering Stock Market course, we initiated a price target on May 6th when we had that kind of double bottom dip that we experienced. Then we had another subsequent one in June and for some other stocks. I went ahead and set a price target of 550 with a primary support of 172, and I told you I was looking forward to the secondary support line of $156. Now, if you go back to May 6th, literally played out exactly how we wanted it to. Let's go to the 6-month chart here, and if we go down, we saw that the stock was falling, and I said, hey, let's wait till it falls a little more. There was May 6th, and then it went ahead and it basically trickled down all the way to 137. And if you go ahead and catch this, it's about 40% gain, okay? Now, I really enjoy CrowdStrike. I do believe CrowdStrike is a phenomenal company. I do believe their revenue growths are great. But the thing is, there are a couple readjustments that we need to do because since May and then what we are experiencing now, inflation has been a pickle that it's been hard to essentially finish off, okay? So what we need to do now is normally when we have these high capacity of interest rates, literally conglomerating literally every single FOMC meeting, it gets to a point where SaaS companies end up taking a hit. And we've already started to somewhat see this develop in Palantir, but that's more basically structurally a administration problem, as we have Alex Karp crying on the side, saying that no one likes, no one understands the software. Well, that's complete BS because Snow is doing well and CrowdStrike is doing well. Let's go ahead and go back to the year, or let's go to year to date. Year to date, CrowdStrike's only down 1.9%. If you look at Snow year to date, this one's down 40%. But if you look at here, Palantir year to date, it's down 57%. But from the year perspective, if you go from the year analysis, it'll be very interesting to see. CrowdStrike it's negative 32% decrease from its all-time highs. Snow is around the same, negative 33%. But if you look at Palantir, it's negative 69%, almost literally negative 70%. So obviously, Palantir's underperforming, and there are obvious reasons for that. So in this video, we're going to go ahead, before their earnings, we're going to do a analysis. We're going to essentially pair them up with the growth rate of Palantir, which is completely undervaluing the company because they're growing at around 60 to 80%, which we will show you. So we're going to go ahead now and go to the numbers here. So this is CrowdStrike's numbers. So as you can see, the revenues have been increasing in the correct direction. Gross margins, they went from 35% in 2017 all the way up now to 73%, which is something that is really, this is something that you want to see, okay? Operating income, definitely, they need to fix that. Operating margins getting into a better direction. Net income, they are still net income negative. However, if we just scoop down to their free cash flow is doing extremely well. In fact, they're free cash flow positive. We'll be using these numbers in our intrinsic value calculation. Now, something that I want to point out to you that Palantir's, another problem that Palantir has is all that shares that they've been basically issuing to retain their talent. Well, if you look up CrowdStrike, they don't have as many shares, which means that the value of the company is more valuable because it's not split off. Let's say you order a pizza for 2 people, 3 people, that's a lot of pizza. Then let's say 20 other people show up, you have to split that pizza, and all that work that you paid for that pizza, the value of it goes down because those folks are getting it literally for free to be able to retain their talent. So this is something that Palantir's terrible at, and they need to fix this, and I don't know how they're going to do it, but when you have cybersecurity companies like CrowdStrike and Snow, which is supported by Warren Buffett and Berkshire Hathaway, definitely Palantir needs to fix a couple things. I really enjoy this company. We're going to go ahead and take some cuts because of the economy, and even as you see that, even after those cuts, you'll see exactly how valuable this company is. So from this perspective, we're going to go ahead and show you that, they're growing around 61% year over year. If you swoop down here, we're going to go ahead and calculate the full 2023 guidance. Technically, they'll have it this year because their quarter is quite different, but we're going to go ahead and undervalue them even more. And we're going to use 2,100, not even the 21.9. So this is $2.1 billion. So we're going to take the numbers from 2017, because they're net income negative, and we're going to grow them, and we're going to basically see what is their growth rate. So if we go to their intrinsic value calculation, now when you go ahead and basically do this calculation, you basically get 85%. Now I personally am not going to grow them out that much. I think that's definitely too bullish. Definitely bullish. I don't think they'll be able to sustain this type of growth. It's very rare for a company to do this. We don't really see it that well happen too often. Just look at Tesla. That's a rare breed of a company. What we are going to do is we're going to kind of shave it off by 50%. So we're going to take, pretty much half of CrowdStrike's, growth here, and we'll be at 42.5%. So we're going to go ahead and put literally 42.5%. We've taken the free cash flow here from the numbers that we received in this specific location, the positive numbers here, and we went ahead and divided by the number of outstanding shares. Now, again, if you want access to this to set your own price targets, to know exactly when they get in and out of stocks, we do have our Mastering Stock Market course, which basically comes with literally lifetime access to our software data, so you don't have to pay for any software out there from a third party. We do have a Labor Day coupon code ending on Labor Day for $150 off. There'll be a link down below for people that are interested. Now, from the price targets here, you can see right now that we are going to hover anywhere between a bear case of 140 to a base of 198 to a bull of $297. Now, if you go ahead and take a look at the price, we're hovering right around what seems to be the base case, right? So that's kind of where we're at right now. Personally, I think this is right in line. I am hoping that maybe they might miss some earnings because of what's going on with the economy. That would be definitely really great to see, because then it will fall down to its bear case. But overall, once this company becomes free cash flow positive and it continues, let's say, it grows at 60%, you can see the massive growth, or let's say, for example, 50%. You can see the massive growth that this company can have. However, with this economy winding down slowly, and whenever you see a lot of tech companies and SaaS companies stop hiring, in fact firing, you're starting to see smoke. And whenever there's smoke, there's always fire. So it's great to just kind of half the growth, to give you kind of an appropriate understanding of essentially what's a good price to essentially get into the stock. So we're going to put it here, 42.5, and this is kind of what we're at right now. And if you look at the current price of 194.6 here, we can put the share price here, and this is kind of the percent upside. Now, I expect, the 297 on the bullish side, we would be getting approximately 10% year over year. But since we're in the base, this is around 12.5%, which is definitely beating the market. This is kind of how you read these things. So the beautiful part is when it does ascend to its price target, let's say we want to set it at 297, then that's a 53% upside. And that really, if you can do that within a year or two, then you can start to see the value of making the investment strategy like so, because you are essentially outperforming the market by 2x, which is great. You know what I mean? If you imagine you had $100,000, that's 25%, that's $25,000 invested. Or if you had $1 million, that's $250,000. So you can see how, as longer you stay in the market and you do risk management, there is definitely you're not going in blind, which is what a lot of retail investors do. So this is kind of how we're looking at things. I want to go ahead and finish this off with a reason why I'm bullish on this company. Well, if you look at their subscription customers, they are growing, and this is exactly what you want to see. It's not like Palantir where, international is going down and US, they have to rely on the military. This is just pure talent here. If you look at the subscriptions and professional services, they are increasing. Even the professional services are increasing at a rate. And this is the type of growth that you want to see. Very organized, systematic, just beautiful, easy on the eye. Something that you just, this is exactly why the stock price hasn't been hit that hard in comparison to Palantir. If you look at the revenues, we already know gross profit. Again, the margins are amazing. Operating income getting into a position where it is going to be respectable as well. Now, net income's where this company struggles in, and this is the battle of becoming full profitable in terms of the bottom line. And they're slowly, as you can see, starting to get near zero term, so they can get into that positivity. In terms of cash, this company's not going anywhere. Look at the amount of cash they have per quarter. It just builds up. So this is exactly what you want to see. And the beautiful part about this SaaS-like company is the gross margins, like I stated here, is in the 70% region. That means for every dollar they basically take, they're able to get out of it 70%. That means the rest can be invested, R&D, and just essentially making their program a lot better and hiring a good marketing team where unfortunately Palantir struggles in. So that's kind of all I have here for you guys. That's pretty much it. And I hope you enjoy this video. Again, most retail investors are not talking about CrowdStrike, Palantir, and that's it. You know what I mean? That's their only cybersecurity. But it's honestly good to be well diversified and actually compare peers within peers. Definitely Palantir does have the most percent upside if they do get their share dilution into effect. Hopefully one day they'll be able to essentially buy out those shares and remove them from the market, and that would essentially help with the overall spectrum of the stock and share price. But when you have companies like Snow or CrowdStrike, it just seems to me that Palantir is of an inferior company in comparison. So I hope this video was helpful. Please drop a like, comment, and please subscribe. Definitely would love to build a community here where we'll be able to help retail investors, and I'll see you in the next one.